Edwin, thank you very much for joining me for this conversation. It's the second one that I'm recording. The previous one was with Professor Asfodamodoran, so I think the standards are set quite high. But I have listened to a lot of your guest appearances on other channels, so I'm sure it's going to be a great conversation.
Costa,
Um,
I'm thrilled to be here. Thanks so much for having me.
I think you're quite an interesting human being, and to be honest, what I admire most about you is your ability to think outside of the box. And we will touch upon a couple of examples throughout this conversation. You have a relatively large Twitter following. You also have a newsletter. I will leave a link to both in the description of the video for those who want to follow you there. But one of the things that you focus on in your research are companies that either harm customers, mislead investors, or in some cases, both, right? Now, one of the examples that I have here is Care.com. It's one of the first big hits that you had. Could you share a bit more about your thought process, and just how was your experience going through that research?
Absolutely, Costa. So I've been passionate about stocks from a young age, like second grade. Freshman year of college, I got introduced to two big short sellers, and I started, shifting more towards the short side and digging into companies. And all my friends knew me as like a guy who likes researching stocks and looking into companies. So the summer between my freshman and sophomore year of college, I was back home and we had a friend who was a babysitter for this publicly traded company called Care.com. And those who don't know, Care.com is, the country's largest service to marketplace to help you find a babysitter. And my friend was a babysitter on there and said, it's really sketchy. You should check them out. I think something just seems off about them. So I start digging into this, billion-dollar publicly traded company. And right away, you noticed a bunch of issues. There was a lot of local media reporting about safety issues, parents who had hired babysitters from care.com that did terrible things. There's been a lot of litigation of parents, saying, we found a babysitter through care.com and it turned out they had a criminal history. That isn't good. How did they pass care.com's background check? So a lot of issues with the safety of this platform, which is a core selling point. So I decide I'm going to dig into this a bit and see if they're actually running their background checks they claim to be doing by trying to sign up as Harvey Weinstein. Because there's no way care.com could approve Harvey Weinstein if they were actually running their background checks. So I used a photo of Harvey Weinstein, used his address, made up a social security number, just basically made up a fake Harvey the Weinstein account with Harvey the babysitter at gmail.com. And I consented to their background check and they're like, we're going to get back to you in 2 or 3 days. No way in the world they're going to approve this account, right? It's so obviously fake. This is the first thing that should be rejected. 3 days later, hello, Harvey, you've been approved to be a babysitter on care.com. Nuts, right? So I screenshot it all and kind of it's proof that they're not running the background checks they claim to be running. So I do that and I write up a little report and it goes viral. It gets a lot of attention. One of their board members resigns the next day. And I think that's the end of it. Look, I showed this company wasn't running their background checks. I got a little bit of attention in a Twitter following. Let me move on. Except the company didn't see it that way. The company was pissed. So they decide to call my college at the time, Stanford, to try to get me in trouble. And apparently, one of the co-founders of care.com had a phone call with the dean of students, and the dean of students at Stanford calls me in and is like, hey, we got a complaint about your Wi-Fi usage. And their whole thing was you violated care.com's terms of service while using Stanford Wi-Fi. So, you violated our ethics policy and you could be in trouble. And I'm just, a little nervous as a sophomore who hadn't been in trouble before. And they're like, I'm like, what do you want me to do? They're like, would you take the report down? And I said, no, because it's just silly. You're trying to bully me into, and if anything, and they're like, will you stop using Stanford Wi-Fi to do this stuff? And I said, I'd think about it. So long story short, it makes me dig in more and I end up filing FOIA requests with every state regulator for consumer complaints against care.com. And I get hundreds and hundreds of pages of consumer complaints about auto billing and other safety issues. I go to local police precincts and file FOIA requests for them for 911 data where parents were calling, went on the care.com babysitters. I get obsessive about this company and all the safety issues they claim to have because I was convinced that they're wrongly approving babysitters on their platform who had criminal histories and serious issues, and those babysitters end up, abusing or killing kids. And I write another article this time on Medium that gets a lot of attention, linking to like thousands of complaints on the company. And then I start cold emailing journalists, and I think I cold email like close to 100 journalists about care.com. And this is about a year in. The Wall Street Journal gets a little interested, and then they do like a 9 month investigation on the company. And long story short, there ends up being like a front page Wall Street Journal story like a year and a half after my first thing. Care.com babysitters who passed background checks, who had criminal histories, that were involved in killing 8 kids. And, I get a little mention in the story. It kind of gives me credibility on Twitter
Of
and
course.
grows my following. And the CEO, CFO, and general counsel all resign. It ends up being sold to IAC at a lot lower of a price than where it had traded. And
Yeah.
it's important for me for a few reasons. One, it showed that like you can really make an impact with this type of activist short work. Like, you can
Yep.
have like concrete, tangible results. It's not just like shifting electrons around, trading money. It gave me enough credibility that when I graduated college, I was able to start this newsletter and people would care about what I had to say. I wasn't just like a random 21-year-old. Um, and it showed that like there's a lot of shenanigans that kind of don't get exposed until someone writes about it. So that
For sure.
it's a fun story to talk about. But
For sure. But if I take a look at your process, you start with something that is extremely simple and anyone can do it. Just signing up as a profile that obviously should not be approved. And a few days later, you have proved that, hey, this doesn't sound right. And if you think about it, this is a simple process that anybody can do for any company that claims that they do vetting or some sort of background check, right? And it is, I'm sure that you use that as part of your process. But anytime um, that a company claims something like this, it should not be taken as at fair value. And especially as an investor, I think it's important to these kind of simple checks that really prove is there a big red flag or not. Now, you mentioned that you got introduced to this world of finance and investing at a very young age. Was there someone who was responsible for this, or
I like the saying that you don't choose your passions choose you. So I think it just, the stock market bug caught me. I always was into math. I was always into learning. There's, a ton to learn about in the stock market. There's lots of information. I think it's a good place to be if you're like a curious individual. Um, but
I
but your
agree.
passions choose you, and that's just the right fit for me, I guess.
Yeah, it makes sense. It makes sense. And your focus is now on cost on generally on companies that either harm customers or mislead investors. Um, it is quite interesting that you went into this kind of niche. But in a nutshell, you look a lot less in the financials and a lot more in the customer satisfaction. And I think that makes a lot of sense because the financials are actually a bit of a lagging indicator. They're published once a quarter, and there's a lot of things that happen in between. But there's also one interesting quote that I remember. If you have a good product and service, but no marketing, it's difficult to get traction. If you have a bad product, bad service, and good marketing, you will be able to sell that but once. You won't be able to
Yeah.
continue selling it. And I think in here you touch upon this point that if we can figure out what is the product or service that is not sustainable, that's just not adding value, eventually customers are going to say, "Hey, this is not something that we want," and eventually a bit later it will reflect in the financials as well.
Yeah, my kind of like high level thing is, I focus a lot more on the qualitative aspects of the business than the quantitative. I think Wall Street is very good at pricing in things that can be quantified, modeling, and that sort of thing. The qualitative is where people struggle a bit, and where I think I have great success. And the kind of my home run type thing is that I see something a business can do that juices the numbers in the short run, that harms the value of the business in the long run. One obvious example is making it impossible to cancel subscriptions. If you do that, yeah, your short run results are going to be a lot better. Your retention is going to be better. Your revenue growth is going to be
Yep.
better, and so on. But it's not creating value. In fact, it's doing the opposite. It's harming your long term value. It's antagonizing your customer base. So focusing a lot on that and a business's relationship with its customers, and finding one where the market thinks this is fantastic, price to perfection, but it's actually you're pissing people off like big time.
Yep.
Um,
I agree. I
you
agree. And
know,
there's always this one argument, oh, short selling is evil, which I don't fully agree with. I think that it is applied and it is correct only for a very short part of the market, and that is if it's being shorted, maybe a company that has negative earnings. But if it gets funding, it will be a great company, right? If short selling enters a company of that kind, I think that it could destroy value in the long run, as the same company would not have the opportunity to raise cash at a higher valuation. But other than that, I cannot see an example where actually short selling destroys value. In fact, if I take a look at what you do, if short selling is involved in companies that harm customers, I would argue that even that creates value for the society as a whole, because the customers are not going to be hurt in the future. And the same goes for the investors who are going to learn a lesson, and hopefully they won't repeat it in the future. On the other side, if I take a look at established companies, maybe that are overvalued, but the business is doing fine, they're creating quality products and services. If they're being under pressure from short selling and the price goes down significantly, that's also not really destroying value. If anything, that gives an opportunity to buy back shares at a low price, right? So, what are your thoughts on this whole short selling is evil argument? Do you see that in practice, or do you see anybody maybe misusing that to pump and dump, for example?
So so it's important to note I don't personally short stocks or buy puts or do any of that. I make money from reader subscriptions to my newsletter, which is a pretty different model than a lot of the active shorts out there. I definitely don't think short selling is evil. I think when you start to dig into it, you see that a lot of short sellers kind of function like real-time regulators. They're often the first whistleblowers on stuff. They kind of comprise this ecosystem of identifying bad conduct, where a short seller might highlight it themselves if they're an activist short. But I think oftentimes short sellers behind the scenes might be people who have a financial incentive to do deep work, find problems, and then give a tip to a regulator or give a tip to a journalist, and that's all good and well when it's done in good faith. I do think that, one valid criticism is if you might sometimes you might be making too salacious of a claim to get a 1 day stock price movement. So the example I like to give is something I don't think was done right was Harry Markopolos published on GE a while ago. And he did I think like a balance sheet agreement with an anonymous hedge fund where typically it works by, you take a big position against the stock, mostly short-term oriented, and then you share the profits of any short-term trading with the person publishing a report. And I think with Harry Markopolos, he like registered the domain gefraud.com and he called GE the biggest fraud since Enron. And he gets on CNBC and starts like yelling and screaming about all this stuff. And, that's probably not good for the markets, and I think that destroys your credibility a lot. But I could see some criticism there. And one kind of just general thought I have is people like to say, well, efficient capital markets, are so good for the world and are really helpful. And I agree. You want to have efficient capital markets that like are good at identifying like promising companies. But that also means that if you're doing anything to make the markets less efficient, that must be harmful for the world. So I think, just if you're wrong a lot, if you're shorting a lot of promising companies, it won't kill them, but it probably does like at the margins impact them a little.
Yeah, I agree. But do you think that the markets are efficient? Because I would argue that in the short run, that there is difficult to make a case for that. In the long run, for sure, if you take a decade, 2 or 3, then I'd say that the markets are on average efficient. But I wouldn't say that in the short run there's a lot of efficiency there. I mean, every day we see companies going up and down significantly, sometimes even on no news or very little news. We see a lot of overreaction in both sides, and to me, that doesn't seem as an efficient market in the short run.
Yeah, my view is simple. I don't think markets are efficient. I think they get a lot of stuff wrong a lot of times.
But even in the long
So
run,
that's
do
my
you think
basic.
that do you think also in the long run that I mean, on average, that they get things right?
Well, I think it's a little bit of a vague, more conceptual question. Like Warren Buffett says, in the short run, it's a voting machine. In the long term, it's a weighing
Sure.
machine. Yeah, it kind of, but like look at Apple. You could make a strong argument that it's just the market's totally underestimated them forever, or Tesla. And I don't know. It's tough to say. Well, what could a reasonable person have known at the time? Or are these new developments that just shook out in their favor? Um, but I mean, like, look at Warren Buffett. He's like can outperform with large cap names. I
Yeah.
think there are some people who've just outperformed consistently trading in large caps, and it's tough to do that if you think the markets are really efficient in the long term. my personal
That's a
view.
fair point. That's a fair point. Of course, it's not an easy job to find these kind of picks, to have them in the portfolio and to also do that for a long period of time. Now, in the newsletter, you share two, or at least in the paid one, you share two ideas. I wouldn't say recommendations because I think that would be incorrect. It's research that you've done that someone can take and develop further, and then, if there's enough conviction, act upon it. I don't know how many companies you've looked into, not only in the in the newsletter, but in general. But do you think is your best work so far that you say, wow, it was a tough job. I gathered all the pieces. Now I have this nice mosaic. It makes a lot of sense. That when you look back, you say, wow, that's a masterpiece now.
Costa, I love it. That's such a nice question. So I would say my core competency are $1 to $10 billion US listed public companies in the tech or consumer space. That's my core competency. And one of the ones I think I just home run absolutely got right was the joint. I think this is back in, October 2021. It had just hit $100 a share. It was up like thousands of percents in the preceding 3 years. They were a franchisor of chiropractic clinics. The market loved them. The market was pricing them to perfection. Everybody says this is going to be like a huge market opportunity. And I showed a few things. One, I showed that their franchise base wasn't as healthy as the market thought. A lot of places were closing, being sold at a loss, losing money. The franchise base isn't that healthy. Number two, I showed that there's a lot of like kind of red flags involving the management. That a lot of the chairman of the audit committee had been associated with penny stocks in the past. A few members of the management team had declared bankruptcy or had other financial issues. This didn't seem like the A+ go team. I showed that the company was largely like abusing their customer base. A lot of people were wrongly signed up for monthly like chiropractic billing without their knowledge and would complain to regulators to try to stop that. During the pandemic, they made it nearly impossible to like cancel subscriptions. You need to go in person to the place where you signed up, but if that place was closed because of COVID, all you could do was like pause billing for 3 months and like wait
Yeah,
for them to reopen to cancel. It was a lot of craziness. I used FOIA a lot to like find a lot of consumer complaints, which is one of my core competencies, going to state regulators and filing a request for information through the Freedom of Information Act. I showed a lot of problems with the management. I showed that there was like a lot of insider selling. And I showed that there was like this undisclosed entity one board member had to, loan money to the franchise base, which was another problem. And all these things where the market was missing. I think the stock fell from 100 to 80 the day of my report, and now it trades at about 12. And even like a month afterwards, I had a Twitter Spaces discussion with an investor on it, and I made all my points and why I thought it was a good short, and he made the points of why I thought it was a good long, and it ended up falling 80%. So I think I won that.
that's
Um,
a great example. All of these examples that you give, especially for this particular company, these are not some pieces of information that you can pull from the annual and quarterly reports. This is something that you get actually the opposite picture if you look only through the financials. And I think that's why it's incredibly important to really understand what the business actually does, and to understand, are those participants in the business actually happy? Are they satisfied with the product or service? And if that's not the case, and there are a lot of red flags, eventually it reflects in the financials and then subsequently in the share price as well. And your research process, I can imagine that, of course, there's some things that are quite standard, that you request FOIA requests and then all this other stuff. But maybe my question would be, what is the biggest challenge that you face in your process? Is there something that you struggle with that you'd like to see improved in the coming period? It doesn't mean that you would necessarily improve it, but maybe the regulators.
I think there's a lot of information out there. So sometimes like there's information overload. There's 20 companies on my working list I want to look at now, but you only have so much time, in a day. I think for larger companies, it can be really it's easier for me to understand what goes on at a billion or $2 billion company. When you have a much larger company, those like you could spend months learning about, and it's still maybe not like have a really deep, full understanding. So those are some challenges. But right now, I've been doing this for 3 years, and I kind of got it on autopilot where twice a month I can produce, I think, a really good, mini deep dive into a company I feel is misleading investors or harming customers. And a big challenge for me is just how can I continue to grow the newsletter and push it to new heights. You get addicted to the growth. The newsletters are businesses that scale really well, where, if I double the number of subscribers, the economics are twice as good, but the work is the same amount. So, on the business side, I think more about how can I grow it.
That makes sense. Makes sense. And from all of these different channels that you use to gather information, I know you're big on Twitter. You enjoy that piece of social media. I know it has a competitor now. There's some noise, so we'll see how that turns out. But what is a weird source of information that you used in the past to gather some sort of useful information? Is there something that stands out that you just thought, maybe I'll give this a try?
So I don't know if there's anything particularly like insane. You're right. I use Twitter a lot, Reddit. I use FOIA a lot. I mostly just like use the internet and stuff you can do from your computer. One of the funniest anecdotes I remember, or like pieces of information, was I go on Reddit when I'm researching this company, Ag Eagle Aerial Systems. They hit $1 billion market cap. They supposedly like made remote control drones that could deliver packages and stuff. And I thought it was like a pump and dump, and it was associated with a lot of penny stock people. And one Reddit person links to an unlisted YouTube video uploaded by the chairman's daughter. And I'm like, this does not seem like legitimate research here. Let me look into it. And it turned out the chairman's daughter of this company posted an unlisted YouTube video to her personal channel where it just showed the Amazon logo and the Ag Eagle Aerial Systems logo side by side for 10 seconds. And that's it. And then everybody on this Reddit thread was like, look, we're so smart. We just discovered the chairman's daughter's video. She's probably like making like, mock-ups because there's about to be an Amazon partnership. And all these guys, retail people, were like spinning up this absurd conspiracy theory. They just discovered the Amazon partnership before it's announced. When in reality, I know like this is not how things work in the
Oh,
real normal world. Like somebody's definitely like kind of faking this, posting it just to build a pipe, or the company's doing it. And I thought that was kind of hilarious, and just like stands out to me how like companies can go out of their way to deceive retail investor bases. Um, Another thing I'm trying to do more in terms of weird research is there's a lot of like these weird Discord groups and newsletters. I think like have big audiences of retail people that pump nonsense stocks, and I would like to get my finger on the pulse of like these weird Discord communities like a little better. I think that's where a lot of like scammy stuff is shifting.
if I may add one source that is relatively easy to access, that's Google Maps. I've I've read a lot of reviews on some companies that I've researched, especially the ones where there's a physical location. And I think that's a simple source of information because if somebody is pissed, they're going to give a bad review and they're going to explain, even in 500 words, what actually went wrong, what went wrong with the service. Um, and of course, now you're in the world of short selling, and that is because you had two mentors from this area. Maybe give us a short introduction of your mentors and what did you learn from each one?
So, Costa, I want to go back very briefly and add one
Sure.
thing to your last question, which is weird research methods. Another thing that I find consistently useful is comment sections of articles. And generally, the worse
Yeah,
an article is, the more fun the comment section is. So I like to joke, I pay for Seeking Alpha Premium, not for the articles, but for the comment sections. And
makes
if
sense.
you scroll through 1,000 comments, there's usually one guy who knows what he's talking about, and that can be a good source of information. Now, to go to your question you just asked about mentors, I had two really lucky breaks in life, and that was freshman year of college. I got introduced to Mark Cajotes, an independent short seller, and Jim Carruthers, who ran a short only fund called Sophos. Now, Mark, to people who know him, he's energetic, he's wicked smart, and he's a little quirky. And I call him as a freshman. I think another like short seller guy who I got introduced to by like, my high school principal's friend's like son's roommate or something told me to meet with Mark. And I call Mark Cajotes as a freshman, and he like hangs up on me. And I call him again and he hangs up. And I call a third time, and I think he takes pity on me. And he's like, oh, if you want to like come up to my chicken farm in Northern California, you can. And I said, can I come up tomorrow? And he said, sure. So I take a very expensive hour and a half long Uber up to his chicken farm, and I meet him, and he's wearing pink Crocs, and he takes me to this like barn of his where he works, and we start talking about Mallinckrodt, which was a sketchy company at the time. He starts talking to me a lot about Twitter and how I need to get on Twitter. He convinced me right then and there to make a Twitter account, and I think he tweeted out like, follow this guy, he's going to be big, and got me my first few hundred Twitter followers. So that's how I got on Twitter in that meeting with him. And then he just became a mentor that I can talk to at any time. I've learned a ton from him directly, and just watching everything he tweets in all his podcasts and such. The other early mentor was Jim Carruthers at Sophos. They ran a short only hedge fund, really close to my college campus. And I would work there like 10, 20 hours a week, sometimes in the office, sometimes from my dorm room, helping them research companies. And the funny way I met him was I was blogging anonymously on Seeking Alpha at the time, criticizing this company, Mallinckrodt. And I said I'm in like the Palo Alto area, but I didn't say like who I was. So he reaches out to me, not knowing who I am, saying like, "Do you want to get lunch? You're writing this stuff on Mallinckrodt." And I go in to meet with him, and yeah, he was so confused. He thought I must be a hedge fund manager or a professor or something, not an 18-year-old student. And that meeting is what kickstarted the internship. So through them, I learned how to do really deep work. I learned a little bit about FOIA. I got introduced to people in the short world. That was kind of a dream come true internship. They also, were paying me reasonably. So I was able to save a lot of money during college, which kind of gave me a buffer so that when I graduated, I was able to launch the newsletter and not need to worry about money initially. So I got lucky in, two really great ways of meeting Mark and Jim.
Well, I don't know if the statement is you got lucky or you created your own luck by being out there and doing all this stuff, right?
Yeah.
Now, I mean, I have plenty of questions that I want to ask you. Of course, the environment that is around you, the working environment, is completely different than when you were back then. Even if it was an internship, if you go back in time, was there something that surprised you from that environment that you thought, this I didn't expect this? Because it is a
So
short selling environment. It's maybe a different kind of way of looking into things. It's again still an institutional. I don't know.
the thing that surprised me most at Sophos was, the focus on qualitative aspects of a company, getting a really deep understanding of a business. I never like interacted with people that knew a company better than the people at Sophos. It was kind of incredible. And it kind of mirrors my style a little today, where I always thought, the way you're taught in school is everybody models, they play the chord, you do all the comp analysis, blah, blah, blah. They did some of that, but 90% of the focus was just truly, truly, truly understanding the business. And I think a lot of people on Wall Street like to say they understand the business, but really just play around with numbers, where some places really truly have a great understanding of the business. That surprised me. I don't know if there's any other big surprises in terms of what I encountered though.
Okay. Now, in this world of short selling, I know that you read a lot of stuff and you want to keep up to whatever is up out there in the world. And I'm sure that you read a lot of short reports. In one conversation, you mentioned that there doesn't seem to be much correlation between the quality of the reports and the price movement subsequent. Do you think that um, maybe some authors, regardless of the quality, are not taken seriously because they have not proven themselves, or is there something else that's behind this,
So
or
I
can it be
remember
explained even?
I remember a long time ago, I was reading Fooling Some of the People All the Time by David Einhorn. It's the book he wrote about his crusade against Allied Capital, this really questionable BDC around in the 2000s. And he said something that struck me. He said he wrote 3 or 4 articles about the company. And the ones he expected would bring a lot of new information and move the stock had no impact. And the really random ones he thought were weakest had big stock impacts. And he said, my conclusion is it's more or less random what impacts the stock. And I thought this is so insane. How can you're writing this? You're a very smart guy in tune with the markets, and you can't figure out which piece is going to move that's so
Yeah.
that can't be right. And now that, twice a month I write little articles on companies, that occasionally move the stocks. I don't want to say it's random. I definitely know if I have some smoking gun evidence at a huge thing that it's probably going to move a stock. Um, but I have found, especially talking to other people too, it's tough to predict. Sometimes I think I have a great thing and the market doesn't care, at least initially. Or sometimes I think, oh, this is one of my weaker articles. And the stock reacts and people really seem to care. So there's a lot of just kind of stroke of luck. And then with these other activist shorts, um, I think it's even more extreme where, people do great work and I'll read an article and it's like it's barely moved. And I'm so confused. The stock should be down 20%. And other
Yeah.
times I'll read something and think it's weak and the stock reacts hugely. Part of me thinks there's a little bit of like group mentality where once it's down 5%, everybody like, okay, it must be good. And therefore the reverse
Mm.
is true, where if the stock doesn't react initially, then everyone's like, oh, it must be old news. Who cares? Just another like fluff piece. There's some of that. I know there's been some regulatory inquiry into like the trading around activist shorts. So I wonder if anything is going to come from that. And another kind of sneaking suspicion I have is if companies know of activist shorts in advance, or get an inkling that something's about to happen. I sometimes wonder if some companies deploy their buybacks right after an activist short report, because there's definitely a thing for a company where if this short report doesn't move the stock, you can show, well, hey, it didn't even impact the stock. This is old news. Who cares? Ignore it. While if it sends the stock down 10%, it's a lot tougher to claim that. So I kind of suspect,
Mm.
this is a suspicion, my
Yeah, of course.
speculation, that some companies deploy buybacks, deliberately. If you have a buyback
Mm.
authorization, deliberately right after an activist short report to mute the impact. I think Brookfield Asset Management might have been like caught doing that when Roddy Boyd wrote on them a few years ago. So that's another factor: is do companies just let the market decide, or do they try to like play games
Yeah.
to mute the impact?
I mean, I don't know if that can be fully proven that they're buying back shares. I mean, of course, in the reports we could see that in the cash flow statement, but you don't really know which day it happened, so it's difficult
Yeah.
also to claim that it was exactly on the same day or the day after the report. So yeah,
And
I
there's other
understand.
I'm obsessed with soft games. So there's like hard games a company could play. But what about a soft game where if you're a 10% shareholder, you might be calling them and saying, look, this is bunk. You'd help us by buying a little on this day. I don't know. Or if there's games you can play. If you're a large shareholder, you'd be buying on the day just to mute the impact because you don't want it to become an issue. I'm not sure.
Yeah, also possible. I mean, it's difficult to prove. I agree, and being exposed to a lot of companies, and especially in your case, you're writing these reports and you don't see the impact right away. For some, maybe a bit, maybe it takes a month. For some, it might take years. What are some companies that surprised you between what were your expectations when you were researching them and actually what happened a year, two, three from now? Maybe positive and negative surprises. And I don't know if you have examples that you'd like to share.
The one example that really stands out where I kind of screwed up was the very first article I ever wrote in the Barricade, Celsius Holdings. And I think at the time the stock was roughly 30 and now it's like 100. So oops. Um, and Celsius makes these energy drinks that kind of compete with Monster and Red Bull, but they got really big by doing a lot of smart Instagram partnerships or sponsorships of like popular creators. And energy drinks are a wonderful, wonderful business because the extremely high margins. There does seem to be some sort of barrier to entry, a great
Yep.
brand loyalty. The best performing stock over the last 30 years is like Monster Beverage. So if energy drinks, when they work, they work. But Celsius had all these red flags. I mean, the management was very subpar. They had ties to like the one MDB fund and the investment banker for that. They had like a sketchy Shark Tank on their board. They had tons of accounting, tons of auditor resignations, tons of CFO, every red flag you could possibly imagine. And I kind of said, who cares about the product? This is just an enormous, enormous, enormous amount of red flags. I mean, just craziness.
Mm.
Auditor resignation after auditor resignation. Pages of like material weaknesses, craziness. And I just thought that this must, this can't work. Um, and I was very wrong. I think now, I focus maybe less on the superficial red flags and more on the core business because they're on fire. And like now I see Celsius all the time in stores, and I'm like, I really, really got this wrong and maybe underestimated the management team and the business. Oftentimes it's like it's more that during the research process, right away when I'm looking at a name, it'll either diverge one of two ways, where it gets on my radar because there's two or three red flags, and I dig in for the first hour, and 10 more like issues pop up, and I dig in for the second 3 hours, and more it just starts exploding. Or it'll go the opposite way, where there are three issues, and after 2 hours of digging there's only five issues, and I'm like, more or less this all seems somewhat reasonable.
Mm,
So it's more pre-research stuff. Let me see. I'm going to look at my site. Well, I'm looking through my past names I've written up because it's tough to, you know,
sure, sure.
think through it all. One that uh, I'm trying to think if there's anything else that really kind of blew up in my face. Other than that, I don't think I've had any huge screw ups. I did write on Symbotic recently, and that was a SPAC merger with a company that does like robotics animation automation for Walmart, and it's just clear that this is not a $20 billion company. And they only work with Walmart, and all the Walmart employees who've been interviewed on expert network calls really kind of disputed the nature of the relationship, like versus what the market thinks. But that the trading dynamics are a little fuzzy, and that has had like a crazy squeeze going from 10 to 40 now. So I don't view that as me necessarily getting anything wrong, because again, this is not like a short recommendation, and I wouldn't have maybe personally shorted it. But that kind of does surprise me, where I think this is so obviously a very flawed company, yet it's up
Mm,
300% on just weird
yeah.
trading dynamics around a post SPAC close. So
But in general, I don't think it's fair to expect a 100% hit rate. You cannot expect that you're 100% right on all the companies that you look into. And not only that, you could be right about a company at that point in time, and things could change in the future. The management could change, the products could improve, the customer satisfaction could change over time. So even if you're right at that time, you could be wrong on the long run, and vice versa, right? And this is the case regardless if you're shorting or long on companies, right? Things change, nothing is fixed over time. Now, there are plenty of stories around corporate misconduct today. Do you think that there were more in the past? I mean, when I say in the past, I'm not saying 30 years ago before we were born. I'm referring more if you take a look at the last 5, 10 years. Do you see that more? Do you think it's more because we have all these sources of information, or do you think it's more or less, yeah, quite comparable?
So I want to answer that in two ways. I know you said just 5 or 10 years.
Sure.
People like to say we're in a golden age of fraud. If I had to guess, my gut instinct, things were worse 1,000 years ago, worse 100 years ago, worse 50 years ago. Things generally, I think, trend in the right direction. Now, is it worse now than it was 5 or 10 years ago? I would say probably yeah, in terms of like shenanigans and misconduct and fraud, because more of that happens to be like committed in frothy markets at the top, when there's tons of easy VC money, when there's tons of retail speculation, when there's tons of SPAC money going around. That's when a lot of like the worst of the worst comes out. So I think it's probably worse now than it was 5, 10 years ago, but I don't think it's worse now than it was 100 years ago. It's just now we have a lot of citizen journalism and real journalism
Yeah.
and people shining a spotlight on misconduct. So which is all good. Uh, but I like to say easy money makes good people do bad things and bad people do worse things. Um, that's my general view. So
I agree with that. I agree with that. And of course, if you take a look at the market participants, there are the big institutional investors, but there's also the retail investors. And if you take a look at the information gap between the two, I'd argue that there isn't any significant information gap. Do you think that you're involved in all kinds of research, and I've read a lot about all kinds of institutions. Do you think that the retail investor has an advantage over the institutional because there's nobody to report to? They don't have to report this quarter's results. They don't have to report this year's results. They can be a bit more long-term focused as such.
Kosa, that's such a great question. Yeah, I think retail investors can have advantages over institutional investors, but not really for the reasons you mentioned behind reporting. I think the biggest advantage retail investors have is their size. I mean, the biggest inefficiencies in the market are in this like sub $500 million market caps and sub $100 million market caps. Warren Buffett said if he could manage, a smaller amount of money and trade small caps, he'd be annualizing 50% plus a year. And I believe him. And I believe an individual that may not be as smart, but still have like a good brain could probably, beat the market. And that's what I try to do with my other newsletter, Sunday's Idea Brunch, where I just interview all these like interesting small managers that are killing it over the long run, just looking at the over the corners of the market. So I do definitely think, it's possible for individual investors to outperform in the long run. Part of it is it's tough for a hedge fund to outperform if you're charging 2 and 20. That's a huge, huge, huge burden to beat. Because if the market goes up 9% a year and you're charging 2 and 20, you need to go up what, like 13% a year just to break even. And after taxes, you probably need to be doing 14 or 15% a year just to get the market return. And then, that's really, really tough, to like
That's
consistently beat. But if you're an individual, you kind of don't have that overhead. You can hold things forever and it doesn't really bother. So I think if you're an individual, you have some level of specialization and you can trade small cap names or companies, yeah, it's totally, totally possible to outperform. And I also think, though, there's absolutely nothing wrong to just owning the S&P 500. Anytime my friend,
I
family
agree.
member or something says, what should I do? I say, just like 100% S&P
I
500. And
or
you're
just
going to
join Wall Street bets and then YOLO and all that stuff. It's also great, terrible advice. Now, jokes aside, of course, I think S&P 500 is a simple way, and it is probably the best option out there for those who don't have the resources in the form of time and knowledge to put work to find good companies. But if I go back to your newsletter, I think one of the something that's important that you have personally is the discipline. And when you start researching a company, if you see, even though if you spend 2, 3, 5, 10 hours, but you can see that there are not enough red flags, and it won't be a great article to say, hey, you know what, I'm dropping this. Yes, I spent 5, 10 hours, but it's not worth spending more. Is that difficult sometimes to drop this to kind of accept that you've just wasted 5, 10 hours? I know it's
so
part of the process, but
it depends. Now, it's because I publish on the first and third Thursday of the month. So right now, I've got like 5 companies I'm looking at, and I'm juggling. And if one doesn't pan out, who cares? That doesn't matter. Now, what's tough is if it becomes a Monday, Tuesday, or Wednesday before I need to publish on Thursday, and the one I was hoping for doesn't pan out, then it's like, shit, like what do I do? I need
yeah,
to find a new company. And I have like, so sometimes what people don't notice is if my big thing doesn't work out, that I don't feel like I can be intellectually honest in criticizing this company, that's typically when I end up doing like a SPAC write-up or a smaller cap name, because that's a dime a dozen. I can do that in a day or two and just like pull an all-nighter and figure it out. The bigger names are tougher.
of course.
So it's typically if I'm in the kind of the home stretch of my like working period, where before the first and third Thursday of the month and the 3 days leading up to that, that's when I'm really busy and like thinking intensely. If stuff isn't panning out, then it's like frustrating. But other than that, no, I just view it as part of the process. I'm
Okay.
like really like the bear cave is me. I take a lot of pride in what I put out. Somebody said they've been reading it for 2 years and they've never caught a typo. And that's because like, it's like my job is to send 6 emails a month and I get paid great for that. And it's like the
Yeah.
dream job. And it's like, I just got to do great with that. And the thing is, when people get really cool, great jobs, you often become a little complacent and lazy and you think, oh, I'll rest on my laurels. And I don't want that to ever happen. So, no, I
Do
don't
you
get upset when it pans out. I care a lot about putting out great articles.
that's I think that's also the reason why the newsletter is successful. You have to start by adding value, and then eventually it takes off. And are
My,
you ever
my
worried that?
favorite saying, sorry to interrupt, Costa. My favorite saying, in business is think small, act like you're small, act like every small thing matters, and you'll get big. But if you start thinking like you're big and acting like you're big and acting like, oh, I'm earning so much, I got so many readers, it doesn't matter if then you get small over time. So it's important
I
to
agree.
always have that mindset that like
I
every
agree.
word matters, every article matters, every individual reader matters, and then that's how you get successful.
I agree. I agree. Are you ever worried that you might not have a company to cover at some point? I'm not saying that, of course, you're looking between 1 and 10 billion. Of course, it might go below and above in some cases. There are quite some companies there. So the pool, the research pool is quite large, and there are all kinds of sources of information where you get tips. Are you ever worried that, well, what if I don't have something of high quality? I mean, there's
So
still, I don't know,
Costa,
you probably have like, I don't know, is it over 50,000 subscribers at the moment? The
yeah,
free
50
ones?
over 50,000 free readers just crossed that last week. Um,
Congratulations.
Thank you. So that's a question I get a lot. Like, aren't you going to run out of companies? So if I publish twice a month, that's 24 articles a month. And, surprisingly, that's not something I really worry about. There's thousands of potential companies I can write on. Um, you know, I've got done, I get tons of inbound tips, which helps a lot. Twitter DMs, emails, texts, phone calls, whatever. People are always reaching out to me with companies I should look at. It's almost
Yeah.
overwhelming at this point. So that keeps it a relatively like easy to get an easy flow of things. Physically writing these articles typically just takes like 2 all-nighters or something, so it's not that tough for me to do. I'm not concerned about running out of companies. It's more I want to transition towards bigger and bigger names, and those tend to be tougher and take a longer time and at least harder to come by. Because again, if I need something, if you let me write on $100 million company, I can find that in like seconds. That takes me like just a day to
Yeah.
find and write up, and I can do that really easily. Or like a SPAC merger isn't tough. Or if I really don't have anything to write on, occasionally I do revisit old articles and criticize a company again. Right now, if you said I couldn't write on any new companies, I know one or two companies you criticized in the past. Or you said, what do I do if like something doesn't pan out and work? If you notice, not the most recent one, but the one before, I didn't actually criticize a company. What I did was I said, here's like the ultimate guide to short selling, where I listed the 100 best Twitter accounts or 50 best Twitter accounts to follow and all these other good resources. That was because the idea I was working on didn't pan out. So, there's ways to get around it. But I'm not really worried about the like thing I like to say is there's no shortage of corporate nonsense and greediness in the world, and I don't think
Yeah.
that's ever going
Uh,
away. So
Unfortunately for others, fortunate for you, I guess, in this case. But do you still operate on your own? Do you have support in any form, other than, of course, all kinds of subscriptions, maybe? But do you have someone else that works with you? Are are you looking for someone to hire to help out? Because, of course, ultimately, you're the one sending the newsletter, so you anyway have to check all that information, right? Do you think that? Do you have anyone, or do you think that you can benefit from someone?
I'm a one-man show right now, and it's 6 emails a month, and that's just what I got to do, and that's manageable enough for me. And I don't know if someone helping me like would really change much. I think the bigger thing for me is I do want to get into YouTube and creating YouTube content, like take the best reports that resonate on maybe national brands and create YouTube videos around it, criticizing companies. I might want help there. I have a few ideas for other newsletters that could be valuable, and maybe I'd want to help creating that. I have an idea to create a newsletter that I might be launching, this fall for college students interested in finance or investing. I think it would be really smart to have a free weekly newsletter for college students who care about investing that curates a list of all the stock competitions open to them, because right now it's very disjointed. Highlights educational material that's good. Highlights a few internship and job postings that might be a little tougher to
Yeah.
find. Gives them the tweets of the week and links to a few good stock pitches. I think that would really resonate with college students, and you couldn't charge for that, but you could get tens of thousands of college students on that and then charge advertisers to advertise their job openings to tens of thousands of college students. And like, this is the best way to hire lots of people in finance. I might start that and want to hire a person or two to help me. So it's more like, not do I need anyone now? I'm fine doing what I want to do now. But if I want to expand into other things, maybe I'd take on a consultant or a college student intern to help with the other projects.
Makes sense. Makes sense. I mean, there are probably a lot of ideas, and I don't know if that helps or if it consumes more brain power having all these ideas and how that looks. I have many questions and also some personal ones. But before I move into that, I wanted to share something that I did quite some time ago. I know that you're big on Twitter, and I don't know if you're familiar with sentiment analysis. There's a way to summarize certain text into basically it's a number at the end between -1 if it's negative, +1 if it's positive, and there's always something in between. um, there was a time when I did some Python programming, and what I did was I would extract the tweets and I would try to figure out, or at least use the programming language to identify the ones that are negative about a certain company. Because if you're looking for a red flag, then you want to focus on those. And actually did quite a good job in that sense. At least it saves me time to skip through the ones where there isn't really much. Of course, the only thing that you cannot filter out is some sarcasm. If somebody says, "Hey, I missed my flight and I didn't get any discount. I love this company," someone is being sarcastic, then you get that. It maybe missed out. But have you thought of maybe using some automation to really get the negative stuff about the company? And also, what I used maybe to add to this was I think it's not only about the absolute number of tweets, but also how that compares to the total number of tweets, if that changes over time a lot.
I don't know if I would like make investment decisions on that or would say that's a core part of the process. I love finding like weird off the beaten path ways to get things on my radar because there's like a lot of people think on Wall Street, so it's valuable to get things on your radar. So when you say sentiment analysis of social media, I would say like could you give me a list of all the airlines by sentiment, and I want to look at maybe the two worst to see why are these ones pissing so many people off, and do that for each like industry and find that like for car
Yeah.
insurance, which car insurance providers are pissing people off the most. And if there's one or two recent IPOs, then I'm like, okay, maybe I'll check into them. For me, a lot of times I prefer businesses that aren't super established because if you've been around for 30 years in the public markets, you likely don't have huge issues. And the market kind of knows how to price you and knows the game. But a lot of times for like recent IPOs and stuff, I think it's a lot more complicated. So using that sentiment as an early stage tool to find outliers that are pissing people off, looking at the outliers that are recently public markets, so everyone doesn't know how to price it yet, that might be a way to come up with ideas. Beyond that, that would be just too divorced. So it's like when I don't like looking at a company, looking at the consumer reviews and being, oh, it's 1 star, therefore it's bad. I like looking at the consumer reviews and reading the specific reviews and trying to make my own judgment. The joke I like to make sometimes is when you're looking at a building in New York City, I don't care about what the overall star rating is. I just care about what the 1 star reviews say. Because if there's a 1 star review building and it's, they said I could do yoga on the roof, but now they won't let me do yoga on the roof. It's like, that's not a really big issue, right? So it doesn't matter if like that's the type of problems that come up. That's actually like a good build versus if the 1 star reviews are there's like rats everywhere and I'm scared to go in my apartment. That's a really bad 1 star.
That
So
might be even a 3 star some places.
yeah,
Yeah,
it's there's fewer rats than my last
few
place, the two
indeed,
stars, and
indeed.
it's like okay,
In-
these are not created equal.
I agree. I agree. Yeah, I agree. I do all of these kind of research as the way I look at it is we have a big puzzle to build, and we have all these small pieces, and the quality of the company is the sum of all these pieces. So I don't think a decision should be made on only one piece. And you've spoken about all kinds of red flags, management turnover as well. I think that's an important one. But maybe let's move a bit more to a bit personal questions. You mentioned some ideas about the future. Where do you see yourself in 5 years' time? So, newsletter, is it still up there and running? Do you think that you're going to continue with this with two companies a month, or sorry, two companies a week? What are your expectations there?
Great question. You never know. I couldn't have predicted I would be in this spot 5 years ago, so it can be kind of crazy. I do think I'm going to keep the news that around. In some ways, you become the victim of your own success, where it becomes so big, you got to keep doing it. And I enjoy it right now, so I couldn't imagine not doing it. It's more. Some people say I should launch a hedge fund, and I think if you're just focused on money, that's probably the right thinking. But I'm not sure I'm just focused on money. I think the path I see myself more taking is trying to get more media attention and just being known as this guy who takes down bad companies. So the newsletter is part of that, but I want to get big on YouTube. If you say I'm a big YouTuber in addition to the newsletter 5 years from now, or I want to try around with YouTube, that could be interesting. One of the people I admire most is another 25-year-old, Jimmy Donaldson, Mr. Beast on YouTube. I think he's fascinating and just going to be one of the most innovative entrepreneurs of our time. So I kind of want to mimic some of his success in some way. So I think just being a person known for like doing these crazy good, great investigations, taking it to another level, maybe creating video content with some of the content from the newsletter, that would be something that would, appeal to me. But I don't know. I'm very entrepreneurial, I think. So, do I start an army of newsletters? Do I start other businesses? I got something really, really valuable strategic positioning wise, and having 50,000 people who like trust and read what I say, generally
Yeah.
skews wealthy. So those people tend to buy stuff. So, it can be, I think I have a great thing as I have it right now, but I also have a great platform to innovate, either entrepreneur wise or creating other
Sure.
content. So my guess is I'll still be doing the bear cave, but I'll have other things as well.
And I think it's best if you focus on not, I wouldn't necessarily say your goals, but more your passion, and be guided by that, and not what others think you should do, because I think that's the recipe for failure. If you do what other people think, I probably, if you did what other people thought you should do, you would not have a newsletter to start with, right? So
Yeah.
probably would not be having this conversation as well. But maybe you should.
Yeah.
I mean, you probably know Coffee Zeal. I think he's more into this space where he exposes bad actors in different spaces. So I can see yourself doing something comparable to that.
Thank you. Yeah, I admire CoffeeZilla. I'd probably mimic what he does in some sort of way.
And if we go on the other side, so we spoke about things that you do, but what about things that you're not very good at? What is your biggest weakness? I mean, at least in your eyes.
I like to tell people I think I have a 500 horsepower brain. I think I'm really smart, but I think I have a really small steering wheel to control my like brain and my own thoughts. And that might sound weird, but it's like, I can get a little OCD about things, I think. And just my mind is kind of, just more powerful than me in some ways. So that's, I think my biggest weakness is also my biggest strength. I think, you know I hope this doesn't come across the wrong way. It is definitely a thing where you can be too nice, and when you're too nice, people take advantage of you, especially if you're a little naive. I think that can be, my thing too. One of my friends says that one of the worst combinations is being very successful and too nice, because then way too many people take advantage of you. So that might be, another thing. Um, I've never. I think. I think I generally get along with people, but I also have a tendency to rub some people the wrong way. I don't know. That might be true for everyone, but I'm very competitive. So biggest weakness is like, not being, I think, a great judge of people from the outset, and having like a mind that's more powerful than me.
It makes sense. But what I've noticed is that even though you spend a significant portion of your time looking at what is not going well, in general, you're a positive person. You're positive not only how the work world is developing over time, but I'm sure that you're positive about the future and what's coming. Um, if we take a look at the world of finance, what companies are you bullish on? What are the companies that you think are doing a great job? And it doesn't necessarily mean that they're undervalued. It doesn't mean that, not from an investing point of view, as an investing advice, just, companies that you follow closely on the other side, on the bull side.
I own two stocks personally, only two, and one of the two is Apple. So, I think Apple just does phenomenally. They innovate. I think are generally like a good corporate citizen. Just in my life, they make my life so much richer, and having an iPhone and having a computer and able to be very productive, and be able to be in contact with so many people. And like, Substack as a private company obviously is something I admire a lot, with making it easy to start email newsletters. You think that might be a trivial thing, but it actually is like unleashed a huge amount of citizen journalism, and I think that trend is going to continue a lot. So Apple, Substack. I know every time I say this, people get upset at me, but I'm an Elon Musk fan. I like Tesla. I mean, Tesla specifically, it's so tough to make a car company and then an electric car company and then be selling millions of cars. It's like, criticism aside, and everybody has a personal flaw. That's really, 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 really impressive.
I
To kind
agree.
of single-handedly be 10, and you look at, like he said, he released this great post, the Tesla master plan, 10, 15 years ago, laying out exactly what he was going to do and then did
Yep.
it. That's really impressive. So a lot of these big companies, Tesla, Apple, Substack are maybe the three I really think are just fantastic.
I would argue that we look at Elon Musk, if you judge him from the vision that he has, from that point of view, he is. There's no doubt that he's at the same level, if not even very close to Steve Jobs back then. He has big plans and he executes well. I think the second part is incredibly important because that is difficult, and he does that not only at one industry but in many others. So whether people like his personality or not, I think that he needs to be admired by the success that he has in the different companies. So whether people get annoyed by your admiration of not or not, that's that's their decision, right? And we touched
Yeah,
upon
fair
YouTube
enough.
channels. We touched upon YouTube channels. I understand. I agree with you. Mr. Beast is doing something incredibly that it continues innovating and comes up with all kinds of new ideas. I don't know how much you follow content creators for YouTube? Do you have some that stand out to you that you're looking forward to the next video that are favorite? I don't know.
Generally, I love Mr. Beast. I love Mr. Beast. I think just an outstanding human. Then some people in the Beast orbit, like Eric and Ryan Trahan, is really interesting. He does this penny series where he started like on the west coast just a penny and he needed to get to the east coast, so he trades the penny for a pen. He sells the pen for $1. He gets a bottle of water for $1, sells it for $2. He gets two bottles of water, sells it for $4. On and on and on, and does these like really innovative things to make money and kind of showcases the best of humanity. So I mean, those are the three I like a lot. Then I like some of the educational content creators like CGP Grey. You can learn a ton watching his videos. Kirkazat, I think is how you pronounce it. Just like a lot of good educational content. Um, there's a lot of good YouTube
So
out there.
it's a mix between entertainment and education. I think YouTube is a
Yeah,
great
yeah,
platform, by the way. Hopefully, you'll join soon, and yeah, I'm looking forward to your videos there as well.
yeah. No,
Now,
I really want to. I think it would be a lot of fun.
for sure, for sure. And you do write a lot and you do read a lot. And your reading is a bit different than what most people would read, and in terms of the FOIA request and then what you get as a response there and the customer complaints. And you enjoy that. There's nothing wrong with that. But do you also have time to read some books? And it doesn't have to be finance related books. Just in general, do you have a recommendation, a book of yours that a book that stands out that you read recently, or
So right now, two of my favorite books were Bad Blood by John Carreyrou, and I really like there's one famous Clarence Darrow autobiographer or biography where Clarence Darrow was this like famous lawyer who stood up for the poor. I really like that book. And then right now I'm reading These Are the Plunderers by Gretchen Morgenson. It's about how private equity is destroying America. And there's a lot of uninformed criticism just with general frustration of private equity, but this has a lot of good specific criticisms, like when private equity takes over a nursing home, deaths go up, patient care goes down. When private equity takes over a bond thing, or like a savings and loan institution or something to do with insurance, the policyholders are more likely to suffer. Seeing concrete examples like that are really interesting. But to be honest, I don't read books a ton. I read a ton. I, I, I like to say I do three things more than almost anybody else. I read the Wall Street Journal more than anyone. I spend hours reading everything in the Wall Street Journal. I'm like addicted. I walk more than anyone else. I walk about 15,000 steps a day and care a lot about walking a lot. And I drink more water. I've got a huge water bottle always with me. Okay. I drink insane amounts of water. Um, I know that wasn't your question, but I
no,
read the Wall
it's a
Street
good
Journal.
addition, I think, for anybody who wants to learn more about you. Then I think that's a great addition. And
Yeah.
if I take a look, I'll go back to the beginning of the conversation, and I said what I admire most about you that is that you think outside of the box. And um, this is not something that started recently. It is something that it's just who you are, right? And I think it's important for anybody who can do that to not take the world as is, to not take any process as is, step back and take a look at the big picture and think, is this the best way to do it? And if you take a look at what you do, right, you have all the tools out there. Some people use a certain checklist. You could have gone that way, but instead you step back and you ask the question, out of all the tools available, what is the most useful for this particular research? And you go down that way. And this also reflects in your days as a student, reaching out to cold calling someone who is one of the best in the world. Well, not everybody would do that, right? Writing on Seeking Alpha at 18, I mean, I'd argue that that is the same. And I'd like to round this conversation with your advice for students, because I think all of this is valuable for someone who is young, and even those who are not as young. I think it's a lot of this can still be applied. We also live in a world where it's not that difficult to reach others. Everybody has an email or a phone number, and I send tons of cold emails, and I reach out in different sources. The way I look at it is, the worst thing that can happen is you don't get a response, right?
Yeah,
So
you
the way I
know.
look at it is, just try to connect with others. There's not much you can lose, right? Maybe you'll lose the minute writing that email, but other than that, right? So what would be your advice for students, or for at least those who are younger, who have time and would like to develop a bit more, both personally and professionally?
So I think that one of the best pieces of advice I ever got is that the smallest amount of initiative makes a huge difference. So great on you for cold emailing people. And once you start doing that, you get so much more comfortable doing that. Okay, you know, just reaching out to people, making some magic happen that way is really really important. I like the concept. I think about a lot of increasing your luck surface area. So how do some people get so lucky? Well, I like to say some people just, you can't make yourself directly lucky, but you can increase your luck surface area. So how does luck not occur? Luck doesn't occur if you're sitting in your room watching Netflix. That's not how luck occurs. Luck does occur sometimes if you're at an in-person event. Okay, maybe you'll meet somebody. Luck does occur when you cold email people, because you cold email someone, you meet with them, and then they think of you maybe in the future, or maybe it creates a spark. The greatest way to create a lot of luck, I think, is interviewing people. So starting a podcast as a college student, I think, is a genius way to break into your field, because I like to joke, if you call somebody up really important, you say, can I ask you questions for 30 minutes? They'd probably say, I'm busy. But if you say, can I ask you 30 questions for 30 minutes on my podcast? They'll say yes. They'll say, thank you for having me on. You'll get answers to all your questions.
Hmm.
You get something you can put online. They'll be grateful to you, and they'll think of you for future opportunities. You interview 20 people for a podcast. Now, all those people are kind of like your evangelist if you did a good job, and that creates a lot of luck. So creating a podcast is really smart. Writing online or creating content online, if it's good, creates luck. And then the thing that's obvious is being very very talented at the thing you're supposed to do. That's kind of key. You can do everything else, but if you kind of don't have much to add,
Yeah.
you're not going to go. But if you're talented, and as a student it's tough, but you show you have some concrete interest and you've spent a lot of time learning about a field, then that creates luck. So finding ways to increase your luck surface area and kind of being deliberate, dressing appropriately, looking happy and approachable and fun and responsible, being mature and kind and
Yeah,
polite, all ingredients for creating a lot of luck. That shouldn't go overstated. Being healthy. Try to create, like, put yourself in situations where you can kind of create luck.
I
Um,
agree. I agree. And I think content creation today is it's incredibly easy to start, and the worst thing that can happen is that you're not successful. But there's a lot to learn in the whole process. I think that's a great way for, if somebody is not comfortable recording, that's fine. Writing is out there as an option, right? Um, what I'll do is I will add a link to your social media and to your Substack for those who are interested. And I would like to thank you for your time, and maybe we have another conversation in the future on another topic. As always, again, to the viewers, thank you for following this until the very end.